Eleanor, what do you fear more? Tax, a global minimum tax in terms of the equity portfolio, or taper?
I don't fear a normal tax rate. I think it's perfectly correct and indeed ethically correct that everybody contributes to the economy. So I think that this 15% global tax rate is an extremely attractive and interesting idea, and I have absolutely no problem with that whatsoever. Similarly, tapering at some point is very important. What doesn't lead me to fear, because this is a job, this isn't sort of a horror film, is language and the use of language and how the market interprets a language that they're perhaps less familiar with. And that means that I get irritated when language is used sloppily by a central bank chairman and may lead to some misunderstanding by the market. I would say that the market also has a rather habitual habit of misunderstanding or choosing to misunderstand the language which is being presented to them. So that tends to create momentary volatility. But in the long run, as long as you choose to invest in companies that you genuinely think are capable of creating value, these macro events tend to be quite short term and not something that leads to us losing a tremendous amount of sleep.
It's an interesting phrase you put out there, so I'm curious, what is the sloppiest central bank line that you've heard, and who's it from?
I don't want to quote anybody, but I think that there is a problem when there is a change of leadership in a central bank, where market watchers are not used to the kind of language an individual will use, and they may overinterpret what is being said. The taper tantrum, I can't even remember how many years ago that was now, but that was an unnecessary event.
2013, it was 8.
Yes, that's right. Yes, I didn't want to quote the wrong year. I think when Mr. Powell took to the reins of the Fed also, there was a little period of adaptation, probably for him as well, as to how people would understand his language, possibly in a slightly more unusual political context as well than what we'd be used to be.
Eleanor, I'd like to squeeze just one more in on the equity moves. We've seen $1 trillion out of back to huge tech, the big fangs, as it were. We put it into the library. Now, this is for anybody that doubts the value trade. Very, very quickly, as we go into earnings season, we're expecting a bumper earnings in big tech, 30% rise in revenue for Amazon and more from Alphabet and Facebook. Are you a buyer of big tech as a theme?
We don't buy themes, we buy companies which can demonstrate an ability to create more value than they were doing previously, or who are continual value creator compounders. And indeed, you do find tech stocks within that space. We've seen some people going to more balanced portfolios and perhaps what they were having in 2020 over the last few months. But as I say, we feel that the idea that when you buy equity, you are buying the ability of a company to create value is the most important message that you can have as an equity investor. And yes, we do find that technology currently is a very good place in order to achieve that.